Hi guys, it's Ian from Signal Centre. It is Tuesday the 10th of December 2019. In this video I'm going to discuss the FX majors, going to highlight support and resistance levels, chart formations, and basically what we're looking at for the remainder of this week. Now today we've got the German ZU survey, that's a sentiment indicator, often will move the DAX and the euro dollar. Then tomorrow we've got the FOMC meeting minutes. Highly expected to keep rates on hold, unchanged. And then, of course, on Thursday we've got the UK elections. We're seeing a bit of a turnover now in sterling and sterling crosses this morning. This has been attributed to the fact that Boris Johnson ignored pictures of a child laying on a hospital floor, and it's the polls are expecting that to be not well received by the UK public. So, like I was saying, we're seeing a little bit of a reversal in sterling and sterling crosses. So, anyway, let's get to the charts. Just drop me down there. The first chart I'm going to look at is the euro dollar. It's the daily chart. Here, I believe we're forming a reverse head and shoulders pattern. Pretty ugly head and shoulders, I must confess, but left shoulder, neckline, head, and then moving down to this right shoulder now. We've got some trendline support at 110.32, and we've got bespoke support at 110.27. So over the medium term, if you like, and that's when I'm saying medium term, short term I should say really, for the remainder of this week we're looking really to buy into dips. Now if we go to this time frame, which is the hourly chart, we could quite easily just break out of this channel formation to move lower to reach that's not very good, is it, to reach that that pivotal level. So at the moment just looked like a channel formation. I think really euro dollar you can play it either way. There's some sort of decent resistance up around here to if you're looking to sell into rallies for that corrective move lower, but you have to remind yourself, I believe, that it is corrective, and I think the long-term bias is still to the upside. Cable, the most important chart I believe is this one, which is the daily chart. Can we count 5 waves? Yes, we can. 1, 2, 3, 4, 5. Now, the thing about Elliott wave is that the 5th wave, it's always hard to catch the 3rd wave, which is the wave that you want to catch because it's the impulse wave to the upside or the downside. Then you get this consolidating 4th wave, which has a tendency to chop people about. And then the 5th wave is the hardest wave to predict, as sometimes it overextends and sometimes it's short. So do you really want to concentrate on Elliott wave? I say not, but it is good, I believe, still to count potential wave formations. Now, like I said, I believe that's 5 to the upside. We've got this 50% retracement level at 131.67. Now, the reason that I like that area is that we've got bespoke resistance located at 131.76. We sold into it yesterday, trying to sell into it again today. We are seeing we had seen a sell-off, and then we're just seeing a bit more of an uptick. I'm just looking at the chart, this 60-minute chart. So 131.76 is again where I'm looking to get short this morning. Potentially, and especially looking at crosses, we talked about sterling Aussie in the Telegram chat yesterday. We're going to look at euro sterling in a minute. Potentially, this is a long-term trade for cable. Euro sterling's hit a medium-term base, potential base, and sterling Aussie, like I said, is actually a weekly wedge formation, which has a ginormous target and a very good risk reward scenario. Euro sterling is a hard one to call. Sorry, euro sterling, dollar Swiss, hard one to call. We've got this medium term wedge breakout, so the long term bias is still to the downside. If we look towards a Marabuzo from the weekly chart, it's around about 99.40. If we look here, and this is the daily chart, 99.36 was a pivotal area. So at the moment, I still want to sell into rallies. If it breaks last week's low, then we're probably not going to get those rallies. But at the moment, I'm still looking at selling into dollar strength as far as dollar Swiss is concerned. And you've got to remember, if we get that move lower to buy into euro dollar, then we should get a move higher to sell into in dollar Swiss. Dollar yen breakout, wedge breakout. Again, we're in no man's land at the moment. If you look at the daily chart, we've had four relatively mixed volatile trading. Yesterday was virtually a doji day. We've got some trend line resistance, reverse trend line resistance, which I always like using at 109.96. Now, if we go to the intraday chart, we haven't really got anything in the way of resistance until up here at 109.25. So I think that we could see a stronger corrective rally in dollar yen to sell into. And at the moment, like I said, I think we're in no man's land. Some people might take this as being a descending triangle formation, and that's worth looking at if we get a reversal pattern around about there, but it's not really my system, to be honest. Dollar CAD, I'm only going to show one time frame here. We had those really strong moves, didn't we, in the Canadian dollar. This was after the interest rate decision, and then this was after the employment or unemployment data release, which came out on Friday. Always sometimes get that double whammy effect with non-farm payroll, because when non-farm payroll comes out, we also have the Canadian release, and if one's good and one's bad, then we get that knee-jerk reaction, which we saw to the upside. At the moment, we've got reverse trendline resistance located at 132.78, and we've got a 423.6% extension level located at 132.78. So really, that's the area that I'm looking at today, at least, for potential short trades. Aussie dollar, probably my favorite pair if I was to have to pick a pair to try and get into this week, and not just Aussie dollar or Aussie in Aussie dollar. I think Aussie across a spectrum of different crosses. So Euro Aussie buying on dips, sterling, Euro Aussie selling on rallies, sterling Aussie selling on rallies, as I already mentioned. So that means that basically buying dips in Aussie dollar. Now we've got trend line support, looks like a channel formation located at 68.06, and we've got bespoke support located at 68.08. So limited downside, quite favourable upside really for Aussie and Aussie crosses. Now this is what I wanted to talk about. Let's go to this time frame. Been pretty, I don't know what that is there. Been pretty hard to get a focus on euro sterling. We don't really want to be trying to pick bottoms, as Joe would say. Very impulsive, strong move to the downside, but we've got some bespoke support located at 84.03, and we've got this 38.2% fib level located at 84.10. If we go to a shorter time frame, that dip's been bought into. We've got a doji style candle. We've tried to get in at 84.03 this morning, might have been a bit ambitious there. I think the daily chart is worth a look. We really want to see reversal formations to confirm our outlook. If we get a day today where we can get a rally and a close up around 84.50, that's going to form a morning doji star pattern on the daily chart. That pattern, free wave pattern, often indicates the end of a trend and the start of a new upward bias. Euro sterling, Euro yen. We've got a wedge breakout basically. So this, I believe, is a short-term wedge. We've got some reverse trendline resistance located around about 120.35, and we've got a fib there. So I'm looking for limited upside in euro yen again today to sell into. We ended up with tiny gains yesterday out of a sell idea. The measured move target, which is obviously important with wedges, is down here around about 119.25. Okay guys, good luck this week. Be back again soon with some more insights. Come and join us on the Telegram group if you're not already there. If you are already there, please ask questions. Please participate. It's no questions are silly questions. Okay, good luck, and we'll speak to you again soon. Many thanks.